Okay, what is up YouTube? It's your boy Sabelo here, and in today's video I'm going to be sharing with you all the strategy right here that is going to absolutely change your life. It's a very simple strategy, but then when it is applied correctly, it is definitely going to change the way you see the market. Okay, with that being said, let's just pick any pair and then we start with our analysis. Okay, I'm just gonna take this pair right here. This is AUDJPY, and then we are going to be using this pair for our analysis for today. Okay, before we get into the actual charts, let me just break out this simple strategy right here. Okay, so in the market we have a swing high and a swing low, and we know that the market moves in only two directions. It is either pushing up or pushing down. So those are the only two directions that the market is moving. If it is not moving in one of those two directions, it is simply in a consolidation phase, which will look something like this, and it doesn't necessarily that it is always going to be of this nature. It can come in many forms. It can come in forms of ascending triangles, where you'll have structures like this. Okay, it can come in a form of ascending triangles like this, and then this phase right here is your consolidation phase. Okay, so now that we have established those two, that number one, we have swing high and a swing low, and then number two, that our market simply moves in between those two significant zones, and how we capitalize on the market is how it is reacting on these zones, or how it is approaching one of these zones up until one of these zones is broken, and then it serves as the opposite zone. Okay, so we are going to be looking for something like this. Let's say we have a market that is coming from this support structure right there and is pushing all the way towards that significant structure, which is your resistance level. Okay, so it's going to push from here, and then maybe give us some type of structure like this, and then this is going to be your consolidation. These are continuation patterns, so we are those are the patterns that we are going to be utilizing when it comes to the strategy that I'm explaining here. Okay, so it can look something like this. Okay, it can look something like this, and then that would be your resistance of that consolidation, and then this area right here would be your support of that consolidation. It can also look something like this, also coming from the bottom, pushing to the upside. You can also have something that is going to look like this. Okay, and then the break of structure, continuation to the upside. Okay, then this is our symmetrical triangle. This is also another form of a consolidation as the market is approaching the swing high or the resistance area right there. It can come in many forms. It can also come in a form like this. Okay, where the high, okay, it can also come in a form like this, where this resistance of the consolidation is equal, and then here at the bottom we keep on creating higher lows, and that is telling us that the market is gaining momentum towards the upside, and then after this it is going to break towards the top and continue with the initial movement. So these are some of the patterns that you are going to be using to make use of the strategy. Okay, so now that is out of the way, now let's actually jump into the actual charts, and then let's just fully do our top-down analysis. And then we're going to be starting on our daily time frame, and then we make sure that we are fully zoomed out so we can get the overall perspective of the market as to how is the order flow or which direction that the market is currently taking. Okay, and then we can see that here we get closer to this current price action. You can see that, okay, as much as this is our swing high, this is our current swing high right here, and then this is our swing low, but then this is our current swing low. Then from a daily perspective, these are the only things that are easy to see that we can mark with ease without complicating anything. And then we switch to a 4-hour time frame to get more perspective inside the market. Okay, then that is that structure right there. Okay, so we know that our market is initially pushing away from this area. Okay, so number one, this I can see the structure right here, the one that I was talking about. Okay, one of them. Okay, so if we look at this, this is creating equal highs right here. These are equal highs, but then when you look at the bottom side, you can see it creating these lower highs up until the structure is broken, and then the market continues pushing all the way to the next significant structure, which is that one. Okay, you can see that now this market had something that looked like this. Okay, let me remove these dots. Okay, this market has something that looks of this nature, and once it broke the structure, it continued pushing to the upside. So how do you go about capitalizing on these types of movement? Okay, so once you have identified your lowest low and your highest high, and then we know that there's going to be some movements in between. Okay, so you could have, number one, firstly, after identifying these structures right here, okay, so 1, 2, you now have a trend line. So after the reaction of the market to this area, you could have drawn this trend line to this area right here. Then after drawing this trend line to this area, you also highlight these highest highs right there. Okay, so you could have waited for this structure, which is your resistance level, to be broken, then you execute after the structure has been broken. Okay, so here you can see that the market it pushed from here, reacted, came back, push, reacted, and came back, push again, then faked out as if it was changing direction. As you can see that this trend line was faked out to the downside, and then it went back after this resistance. It broke this resistance, retested. Then that is when we have this huge impulse. That is where we could have capitalized. So after seeing that this resistance eventually failed on holding this market as a resistance, and then after it is broken, now it acts as a support. So we could have switched to our smaller time frames to find our entry at that point. Okay, so as you can see, we are on our 15-minute time frame, which is where we essentially find our entries. Okay, and then when you have a look here as well, you can also see that we also have one of our continuation structures right here that we utilize. So now we have multiple confirmations. As you can see that also this market, it broke and then consolidated, on top of the other consolidation pattern on a bigger time frame. So that could have given us more confluence as to this is going to be a profitable execution. Okay, and then what do we wait for? We also wait for this resistance right here to be broken, this immediate resistance to be broken. And then as soon as we hit this candlestick here, close above this resistance, this is where we could have taken our buy entries using this strategy, and then your stop loss will be this below this area right here, right here. But then if you want to be conservative, you can just put it below this structure right here. It's still a very reasonable stop loss, the 26 pip stop loss, and then you drag your take profit to where your next significant structure was. Okay, switch to 2 hours. Okay, so our next significant structure was around this area right here. So that is where we would have had our first stop loss. Okay, sorry, take profit. And then as you can see that the market, it simply cruises after this movement all the way to this swing high right there. Okay, so that is example number one. Let's just change a pair and go look for this type of patterns on a different instrument, so that you can fully grasp this concept and see that it works across multiple other instruments. Okay, let's take EU. Where is EU? Okay, let's take EU. Okay, there are no drawings here. Let's take EU. Okay, sorry. Okay, remove our drawings. Already explained the concepts before, so now we are simply going to be doing our analysis, and then we get into the application of the strategy. Okay, let's make sure that we are fully zoomed out. Then we focus on our recent price action. Okay, then we can see that we have this as our swing high, then this area right here is our swing low. Okay, okay, and then we have this structure as our recent what you call swing high, and then this area right here is our recent swing low. Okay, there are many other structures that we can see right here, but then I'm just going to keep it simple for the purpose of this strategy right here. And I can already see this type of what you call strategy playing out right here on this trade as well. Okay, on this chart. So after that, we switch to for our time frame for more insight and more clear price action. Okay, so we keep that right there. So after we have established these two, okay, we can see right here how this market played out. Okay, we had this structure right here as it was a consolidation. The market was simply consolidating here. Okay, we can see that we were initially coming from the bottom and we were pushing to the upside. Then we had this market gradually pushing up, and then all of a sudden we had this consolidation in between these two structures, support and resistance, consolidation, and that is where we would have positioned ourselves for a potential trade to the upside. Okay, let me highlight this area right there. Okay, this is our previous significant level. Let's take as if we are here, then all of this move has occurred. Okay, so at that point, after analyzing this, then we would have waited for a breakout here as well. Okay, and then as soon as the market break this resistance structure, then we could have executed a buy and then put our stop loss accordingly. Then our take profit would be at this resistance level right here. Okay, so once that we have figured it out on our higher time frames, simple switch to 15-minute time frame, and then that is where we are going to be looking for our entry. Okay, then as you can see that once we get to our 15-minute time frame right here, okay, we can see this market breaking out of the structure. Okay, is this huge bullish candlestick and then closed above, and then that is where we would have taken our entry. So as soon as the market closed there, we could have entered there and then had our stop loss below this the structure right here, which is our swing low. That's a 44 pip stop loss. Okay, then where is our target right here? It's our previous swing high. Then drag our take profit all the way to that area, then look at what happens next. As you can see, the market easily blow right through our take profit and continue pushing further up, but then our take profit would have been at that significant structure based on our higher time frame, just like I have explained, and that is a more than 1:3 risk to reward ratio trade right here. By simply using those continuation patterns and your top-down analysis, you can be able to cater to make those 1:3 risk to reward ratio type of trades like this, and then go back, test the strategy for yourself, and then come back and comment below this video below as to how did you find it working out for you. It is a very profitable, and then I'll be dropping the next video on the reversal patterns, whereby we are now trading the counter trend, not trading along the trend. With that being said, I'll see you all on the next video.